Hey guys, Steve here with the weekend update for Saturday, October 11th, 2014. Obviously, it was a rough day, a rough week. Not much going in our direction, and portfolio paid the price for it a little bit. As far as the markets, we'll go over those in a minute, but I want to just start with taking a look at the model portfolio. You could see here that we are going to be exiting Expedia. Okay, stop hit on our position. So that one looks like, as much as we were in and it was looking good, we're going to be taking another loss on that one. But again, you can see these losses are small. We're going to be exiting that one for about half R. Disney was a little bit bigger, 0.9 R. But you can see what we exited this past week, GD 0.36, and ADM we actually took a profit out of. So, all in all, we're still taking losses, but we're taking small losses primarily. We're not letting those losses get too far out of reach, and it's helping for when this market actually turns around and starts heading in the direction we're looking for. Now, as far as performance goes, as much as we've been losing money, pretty much since what week was this? Let's see here. Since the beginning of September, essentially we've had a rough go of it here for the last month. At one point we were up 6.29%, and now we're actually down almost 3%. So it's about a swing of 9%. 10% starts to get me a little concerned, that from highs to lows. But we are going to go through drawdowns. But you could see that in retrospect, as far as the S&P 500 goes, we were well above the S&P 500 for a while. And don't forget, we were using margin, so we were actually leveraged for both the updraft and the downdraft. So that's why these swings are a little bit larger. So for right now, we're going to actually try and stay away from the margin a little bit, especially with our long positions. But you could see here that over the last, since we've started the portfolio, the S&P is actually down 3.86%, and we're only down 2.98. So we're still outperforming, although it would have been nice to keep this blue dot somewhere up in the positive range while the S&P was negative. That would have been ideal. So and again, don't forget, the S&P does not go through the same types of fees and everything that we are going through with the model portfolio, as far as commissions and margin reduction rates and everything like that. So all in all, again, I'm not 100% happy with the performance over the last month. I would have obviously liked to keep it somewhere up in this range, but that's an ideal world. For right now, though, I'd like to get it back to the positive range, and while the S&P maybe stays negative. So this week, what we're going to do is we're actually going to have two watch lists. We're going to have a long and a short watch list. And again, as I said in the nightly recap, so if you don't receive the nightly recap, please sign up at the website. If you haven't shorted a stock before, or if you haven't used put options before, definitely paper trade them. All right, there's certain risks that come about. Short positions, if you're short stock and it goes ex-dividend, you're going to be responsible for the dividend. So they're actually going to go in and physically take however many shares you're long or short. They're going to take that dividend out to give it to the person that you borrowed the shares from. There also is different margin requirements. I think it's 1.5 times as opposed to half, like it is for long positions, especially for Thinkorswim. And as far as the way I personally short is I use put options. And then there's certain criteria for that as well, where you want to make sure that you're buying liquid options. The bid-ask spread is not too wide. You want to make sure you're buying, where you're not leaving too much in the terms of, the spread between your break-even point and where the stock is now. So, again, it's a lot of different things to take in. Once I get the new website up and I start launching some e-courses, I'm definitely going to be doing a short trading course and a intro to options course. So I highly recommend you check those out when they come available. But for right now, let's get back over to the actual charts, and let's take a look at what's going on for this week. All right, so here we are. We're looking at the S&P 500 futures, and you can see we had the trend lines drawn in. Two potential trend lines going through the low from 8.8, and we pretty much put support right around this area here. I really thought that when we bounced on Wednesday the 8th that we were going to continue and put in a higher candle, just to kind of break this downtrend line, solidify that this was a bottom or a potential bottom, and the next day pretty much put that whole idea to rest, as we realized that that was really just maybe professionals getting a better entry point for their short trades, whatever it may be. But we followed through to the downside on Friday after Thursday's large move, down another 30 points. So in 2 days, we gave up almost 60 points in the S&P 500 futures, which is a lot. So we came right down into this support area around 1900. I think the afternoon on Friday got a little away from everybody. I think that was more just a little bit of panic selling. Not saying that's a bottom, but I was surprised to see how quickly the afternoon selling kept progressing and how quickly the stocks were being pushed down. So I would not be surprised to see Monday or maybe Tuesday a bounce back towards this trend line, but then it all is determined if we break the trend line and we continue higher, if it's a V-shaped reversal. But I think if it's going to bounce, it's got to do it soon. My assumption at this point is that we are in a downtrend, whether it's a short-term downtrend or a longer-term downtrend. That's unclear at this point. But my thinking is we bounce back to this downtrend line and then roll over again, break down, and test 1870. I think that's more of a support level. You could see all the highs from back in the middle of March and April that hit that 1870 level. So I would be surprised if we don't test that 1870 level at least sometime towards the end of the week, maybe next week. But for right now, I'm thinking we're looking downtrend, and that's why we're adding the short list as well. So the NQs really is what led us lower. You could see here down almost 3% versus 1.6 and 1.06. So this was a significant day. Again, we closed on Wednesday at 4031, and we closed Friday at 3847. So almost 200 points in the Nasdaq futures. So again, significant moves, significant downdraft. But you could see where we came to on the Nasdaq, right to 3850, closed right at it, and that was what I was considering to be support. So that's more of a reason that I'm thinking we get a bounce, and maybe the Nasdaq now consolidates in this range. I'm not sure yet, but I definitely think we at least bounce back to the trend line. YM, again, we were looking at potentially having this as, if we connected the 2 points for a little bit there on Friday, we were bouncing right off of that, almost to the T, and eventually with the selling pressure we broke down. So this one looks like it's got a little bit more room to run, similar to the S&P. I would see this one down here at say 16,236, or maybe even 16,000 even. For right now, though, still under that downtrend line. So the downtrend line is controlling, meaning bears are controlling the market, and short trades are on the table at this point. So the one caveat that I will mention, and again, we're still kind of exploring this whole idea of this linear regression channel up here, is the Dow, the Nasdaq, okay, and the S&P 500. My computer wants them get going today. Are all pretty much sitting on this second standard deviation move to the downside, meaning if this holds true, that potentially we should bounce and revert back to the mean. Now, obviously, looking at it now, that's a long way to go from almost 1900 to 2000. But what if we happen to break the downtrend or the uptrend line and are now consolidating in a box similar to what the Russell did? Okay, what if we were on an uptrend, now we're breaking, and now we're going to go sideways? Now, obviously, again, look at the Russell, down to that second standard deviation move. All right, so a lot of things to think about here. the other thing to think about is that Russell could be forming a top, and with this lower high and now a lower low, maybe it bounces, puts in another lower high and another lower low, and now all of a sudden the trend changes and it's a downtrend in the Russell while there's still sideways action in the other three indices. So a lot to think about for right now. Again, we were looking for some direction the last couple weeks, and it seems the direction is down. So we'll go over some potential short setups, and I'll go over just a couple that are really what we're looking for. It's essentially the same idea as a long setup, but inverted. So let's get over to a look at our positions real quick. All right. So before we get into our positions, I just want to actually go over Pepsi. We're going to be entering Pepsi. All right. Pepsi didn't really care about the market pullback. All right. It had had earnings on the 9th. So that's why you see this giant candle here where it did sell off. But look at what it did on Friday. At one point Friday, it was looking really good. It was up almost 2%. And that's when I had tweeted out that was a potential entry point. So what we're going to be doing is we're going to be entering Pepsi at the open. And there's two ways to play this. The one way is we're going to set a stop here at 91, keep our tight stop, and take a half a position, or I shouldn't say half a position, take a 0.5% risk on the portfolio, meaning instead of risking $750, we're going to risk $500 on the trade. Or the other option is to risk the full 0.75% and put our stop down here at 88.15. Now, the way I'm looking at it is I'm prepared, I think, to put it at this $91 because that would pretty much satisfy all the criteria for our stop. It is a tight stop, but that would satisfy a break of the 50-day moving average, a break of these lows here, a break of this low, and a break of the trend line. So I'm thinking we're going to actually enter a position 0.5% risk, just because the stop is very tight. The way it works out right now would be almost a $18,000 position, which is at this point a little bit too much. So I think what we're going to do is reduce that down to like a $12,000 position, 0.5% risk, and go ahead and put our stop as a break of, even if we said $90 just to make it even, give it a little bit of cushion and enter a position on Monday morning. So that's how we're going to play that one, 0.5% risk. And I think maybe what we're going to do is going forward, we're going to reduce our positions to 0.5% risks until we can kind of get out of this drawdown and start, putting together some good profitable trades. And in this way, our risk is very small and we could take some positions and see which ones play out the best. So from now on going forward, we're going to go with a 0.5% risk as I think a good situation, especially when the market is very choppy and a lot of volatility right now. So we will be entering Pepsi. On the opposite side of that, we are going to be exiting Expedia, as we just discussed. So you can see what happened here. We had the nice uptrend intact, consolidated, and now, sure enough, breaking down below this 82.51, below these lows, below the 50-day moving average. So a lot of things came into play there, and you could see that we are going to be exiting Expedia on this trade. So as far as our positions go, right, so we're going to take and look at Apple here. And now Apple pretty much broke that small downtrend line that was in play and is now right in the middle of the range. It does have earnings coming up on the 20th, and it also has an iPad event coming up on the 16th. So for right now, I think maybe we can, if everything kind of plays out, Apple is showing to be a very strong stock at this point. It's still holding in this range. It's not, it's consolidating when everything else is pulling back. So if we can kind of get some good buying pressure in the market, we could definitely see a breakout over 103 and even maybe add to a position if we already had one, or add a new position if you're new. So this is turning out to be another good setup, and right now our stop is $98. Now we entered Costco during the week, and Costco again had two good days. We entered here on this breakout on the 8th. So I'm sorry, we entered on the 9th. This was the trigger on the 8th. And it looked really good on the 9th and then sold off, and it looked really good on the 10th and then it sold off. So I'm looking at this not so much as if this was a normal up day and we saw these types of candles, I would be very concerned, just because there's definitely some selling pressure up there. The fact that Costco was up both of these days and the day before, to me indicates, again, very significantly strong stock. And we entered this position with a stop down here at 120. So we're giving it plenty of room to the downside. And I think what's going to happen there is, we may eventually test this trend line, but you could see that we are on the weekly chart. This is a nice type of pattern. This is called a cup and handle. So where you have this swoop in here where it moved down and you can almost fit a circle in it. Let's see if I can do it on the first shot. Not bad. Okay, so you kind of get that cup and then you get the handle where it pulls, moves sideways and then breaks out. So good looking setup on Costco on the weekly chart. Daily chart is definitely holding up nice and strong. So the first sign for trouble would obviously be a break of 124.75, then a break of the 50-day moving average, and ultimately a break of this downtrend line or this uptrend line here. So Costco looking good. Disney we exited on Friday. Unfortunately, Mouse had to go. I'm a Disney fan as much as anybody else, but stock was going the wrong direction, and therefore we are out. So I'll definitely keep this on the radar. See if we can get any type of new setup and new entry in Disney. But this is something I want to just go over real quick. This is actually one of the setups I use for a short trade. All right, so you have this uptrend line intact. You see it was setting up nicely. It broke the uptrend line, consolidated again, and then broke down again. So this is a reversal trade, meaning that it was going up and now it looks like it's going down. So if you were going to take a short position in this, which I did with put options on Friday, and I have my stop over 89.45. Okay, so essentially what that's saying is this downtrend line is in play. You could see the breakdown from it. We moved back on Friday, so this did show some good relative strength on Friday, which is, to have a short position is a little concerning. But right now 89.48 is the stop in those puts, and you can see what's happening with the 50-day moving averages. It's starting to almost roll over. So the one thing that I like to see when I play these reversals is a stock that was above the 50-day moving average that's now trading below it with a downtrend line intact. And you'll see another setup like that when we go over the watch list. Expedia, we went over. Home Depot, we entered again this week. Again, we entered on the 8th, and it had a little slight pullback, but you can still see it's consolidating up in this upper end of the range. And our stop in Home Depot is $88. Kroger was another one we entered, and this one again continued to outperform nicely. Had this nice tight consolidation, so I actually moved our stop back to $50. All right, so we're using $50 as our stop, and the uptrend is intact. So I'm hoping that this one is kind of one that you forget about, and 3 months later it's up 20 or 30%. This is kind of the idea of some of these consumer staples. You can see their daily ranges aren't very big, their pullbacks aren't very big. So I'd like to just let this one play out and work. LUV, this one, I'll be honest, this one's a tough one to play right now. I still think we have to use this 29.39 level as our stop. Unfortunately, the way it all plays out, this longer term trend line is still intact. All right, so the trend hasn't changed, in my opinion, in LUV until we break down below these levels. This was something very similar to the trade I had in Alcoa that we went over briefly, that it ran so far so fast. Obviously, I would have liked to get out at the top, and you could see what signaled the top was a bearish engulfing pattern. All right, we've talked about this in the past, but you could see it opened higher, closed lower than the previous bar, and that basically got the ball rolling to the downside. So I'm hoping that we can find some support down here. If not, I'll be fully prepared to take an exit at 29.39 and a slight gain, not much, but a slight gain on the stock. So I'm the fact is the last 8 days we've had one up day. All right, so it's very oversold. I think at some point it's going to bounce, and hopefully when that bounce happens, it breaks this downtrend line and it starts higher. But for right now, and then if that's the case, then we can obviously move our stop higher. But I'm looking at this point that if we can get a bounce, I'd like to move our stop somewhere into this 30, 50 area and at least capture some more gains. You can see again, earnings coming up on the 23rd. And the last one, RSG. This was one that we've talked about, and this would be one that would another short setup where it was trading higher. Now it broke down below the 50-day moving average, and should we start trading in this area here under this downtrend line and then break down below 37.86, that's another short play. All right, so you would be able to have a reversal trade set up. 38.73 would be your stop, and your entry would be 37.86. And again, whether you use put options or not, that's your idea, your comfort level. But again, if you have not traded either short or with put options, I highly recommend you use paper trading to at least get yourself familiar and comfortable with both of those products. So again, same criteria though as far as a long and short trade setup. We don't enter a trade 2 weeks before earnings, and we don't oversize the position, especially with options, and especially with short stock. It's just very simple. Short stock, 0.5% risk. Options, in my case, I keep it very small, 1 maybe 2 contracts, and I actually use a specific dollar amount for options, because there's so many criteria that go into what the loss is, that I use like a 50% stop on my options, and I know 50% of whatever I bought it for is about the amount of risk that I use for my portfolio. So just some quick guidelines for that. All right, watch lists. All right, you can see they're very small at this point. Let's go through them quickly. UNH. This one's still holding on to that 50-day moving average. The box that we had drawn here is still somewhat in play. You can see here that it is consolidating again on a lower level, but the 50-day is still being held and the uptrend line is still being held. So we would still be waiting for a break over 88.50, but this marginal breaks that it had and pretty much closed right below 85.64 during the week is the only reason it's still on the list. JWN 70.57. Okay, tried to break out Thursday and Friday, couldn't do it, but this one looks like one that we get some buying power, buying pressure in the market, that we can break that level and enter a position in that. DPS, again, uptrend very much intact, moving sideways. So I'm thinking maybe this move sideways a little longer, allows that 50-day to catch up, let earnings pass, break out over 65.25, and you get on for the ride. Allstate. This is one I think we added this week, but you could see here I'm looking at trend line, something along those lines there. I like the fact that this has continued to move sideways while other stocks have broken down, so that to me signifies again a strong stock. And we're waiting on a breakout over 62.30. SRE, really just trying. It did break out on what day was that? Wednesday. For some reason, I don't know why we didn't take a position in that. I think I might have missed it, but sure. Either way, 107.27 is the entry point for that. ACE. Okay, this is one that is new for this week, and you can see the trend line is in place and the consolidation is also in place. So if we get a break over 107, say call it 107.50, then that would be our entry point. Waste Management on the list from last week. You can see here trend line is in place. So again, this one has a little bit of sideways action to maybe get to that trend line, but the 50-day is still supporting, and a break over 47.64 would be that entry point. ABC continues to move sideways. Looks like it potentially broke the trend line by time, not price. So we're still waiting on that break over 78.30. Goldman Sachs, another new one to the list. Okay, you can see the uptrends in place. And you could also see that support and resistance of that consolidation. 180.50 is your support. 188 is your resistance. So a break over 188 would be a great entry setup for that. Merck, this one still pretty much in the box that we had drawn. All right, so we'll see what happens with Merck. The downtrend line that we're looking at here, though, is a little bit concerning. Okay, it's very difficult at this point to even draw an uptrend line. I guess we could draw something like that. So this one may consolidate within this triangle, but ultimately we would need to see a break over 61.25 to enter Merck. Discover Financial, another new one for this week. And you can see how, having these market pullbacks obviously is not great for the bottom line of the portfolio, but it really does identify some of the stronger stocks in the market, especially in the S&P 500, which is where we look. As you can see that some stocks are still above their 50-day moving average, and they're just consolidating, waiting for some buying pressure to come in, and ultimately, hopefully, breaking out over 65.70 for Discover, and ultimately on the other stocks breaking out over their resistance. So for right now, this one may continue to move sideways to that trend line, but over 65.74 is the breakout level. CCI did break out, and we discussed the potential of really looking for a breakout over 81.64. That didn't happen, and then sure enough, Thursday, Friday happened, and we're right back into the middle of the range. So for right now, I would be waiting on a break over, say, 81.50. Let's remove this. Over 81.50 would be the entry point on CCI. CenturyLink continues to move sideways. Now, this was one I discussed that, the linear regression channel is actually down. For the last 2 years, it's down. We're pushing into that second standard deviation overbought conditions. So I'm curious if this one actually breaks down or breaks out. If it breaks down over 38.73, and then we can get another consolidation below that and another breakdown, then that's a short play that we could enter. WLP, WellPoint, uptrend is intact. Again, moving sideways. There is this small downtrend line in play. So let's see which one breaks first, the uptrend or the downtrend line, but ultimately a break over 124.50 is our entry point. And the last one, MJN, Mead Johnson Nutrition, uptrend was broken. All right, came up, tested the bottom side of that, and now sure enough is moving sideways, looking like it may break down below 93.95. And again, my assumption would be if we broke 93.95, potentially test 91.40, consolidate within 91.40 and 94, and then break down again. That's your short play, that's your downtrend, and that's your stop level. So, right now they're on the long list. Some of them could potentially get moved to the short list. One that did get moved to the short, or two that got moved to the short list, was Alcoa, and this is a setup that I tried to take on Friday. I didn't get filled, unfortunately, but essentially what would happen with Alcoa would be, here's your uptrend, all right, and now it broke below the uptrend. The 50-day moving average is above the current price, and it put in a consolidation on below this trend line and then broke down. Okay, so downtrend line, consolidation. Now you have your resistance and your support. Support broke. So if you wanted, you could enter this position. I'm not going to enter this position because we didn't discuss short trading last week. So some people that may miss this video are going to be a little lost. But this would be a perfect short play with a stop over 16.33. Right, that would be your stop level or your buy stop level. Because remember, everything's backwards now. But again, this one has some room. It looks like next support probably wouldn't be down here till 13.88. But unfortunately, sometimes they don't go the way you plan, and it may just move sideways and then break out higher. So, either way. But that's one I wanted to just show you the the idea of a reversal, similar to Disney and similar to a couple other ones I've talked about. Estee Lauder, same thing. All right, here's your uptrend. Uptrend was broken. You put in a consolidation now below the 50-day moving average. Okay, so criteria 1. Criteria 2 is downtrend line is intact. And criteria 3 is you are breaking down to new lows. So again, Estee Lauder, you want to buy a put. You have plenty of time till earnings. You buy a put, short the stock. Either way, your stop is pretty much over, I would say 75.50 on a closing level. So either way, those would look like two good short positions that you could take for next week, entering on Monday. GNW. Now there's another type of short trade. We looked at the reversal, and then you could also look at the continuation like we do for long trades. So here is the downtrend line is intact. You can see that we're moving sideways to meet that downtrend line, meet the 50-day moving average. We hit the 50-day moving average, breaking down now. So this would be one. Again, you would want to enter. And usually with short trades, I keep my stops a lot tighter than with long trades. The fact is, if it's short and that's the way the market's going, things fall a lot quicker than they go up. So I would not want to see a break over, say, 1347 if I were short this trade. Whole Foods Market, another short setup that I found. Again, downtrend lines intact, moving sideways, but you can see what's happening here with the 50-day. It's just pretty much in the middle of the range, moving sideways as well. So this one would be one that potentially you would need to see a break of 36.42, which is this line right here. Oops. Okay, 36.42, and that could potentially lead to a lower price. You could also look at the longer term trend line coming into play. So 36.42 breakdown would be a good entry for a short position. And the last one being WYNN, WYNN, and again, 50-day moving average is above, consolidation moving towards the 50-day moving average. So everything is just like we would normally do for a long trade, except now we're doing it on the inverse. So the 50-day moving average is above, move this sideways, 50-day moving average comes more into play, and then eventually a breakdown below. Oops, wrong tool again. 176.02. All right, and then if that's the case, your stop would probably have to be over 189. All right, so this position would be sized appropriately. Again, this may be too wide of a spread for people trading put options, so this one may be more of the one that you would want to trade some stock on to size your position properly. So, bunch of different looks. Again, we can take a look at AA as potential and EL as potential short trades. But I'll be honest, when I went through the short trades, the one thing that stuck out was how quickly and how far a lot of these have fallen. So there really wasn't a lot of good setups that were coming out of the short list. So these are two, again, Estee Lauder and AA, that could potentially trigger. The one that I entered was a short in Disney. Okay, so similar setup. You could see there. So what I'll do is I'll also enter positions for AA and Estee Lauder, and then we can kind of take a look at how those perform. And what I'll do is I'll actually enter them short in the model portfolio. I won't use the options, but just again be aware that there are fees that are going to be associated, different margin rates, so we could at least see how these play out, because essentially the model portfolio is more of a learning experience for everybody. So it doesn't have to be, if you're not comfortable shorting, then just don't do it in your portfolio, but we can do it in the model portfolio to see how everything reacts. So again, I will enter short positions in AA and Estee Lauder. So going back on what I said before, let's make this an educational experience for everybody. And I will also be entering Pepsi long. All right, so Pepsi long, AA and Estee Lauder EL long, short, and we'll go from there. So I hope you guys enjoyed the video. I hope this kind of gave you a little idea of how to play both sides of the market. Definitely have a great rest of the weekend. We'll see you on Monday for the stock market outlook and the strategy session. And in the meantime, please hit that like button below, leave any comments or questions, and subscribe to the Nightly Recap and the YouTube channel. Take care, guys.